Hi, welcome to process costing using T accounts. This is part 3 of FIFO process costing. My disclaimer and copyright notice: the information and opinions in this presentation are those of the author only and not the author's employers or affiliated organizations, including but not limited to the Irvine Valley, not limited to Irvine Valley College and the South Orange County Community College District. This presentation is for educational purposes only and does not constitute any legal or accounting advice whatsoever. This presentation is copyright 2008 to 2020 by Bennett Tchaikovsky. All rights are reserved. Any distribution is strictly prohibited. Presentations from time to time use information from third parties and third-party information. The third-party information is the property of those respective copyright holders, and the author does not make any claim to the third-party information. So this is kind of a flashback to what we were doing in the very first video in this sequence, but right over here, there's two different methods for determining process costing as FIFO and weighted average. The difference between the two methods only is in the beginning inventory units, in both how we handle the cost as well as how we come up with that cost per equivalent unit and determining the equivalent units from the beginning inventory. The key thing for equivalent units under FIFO is we're taking the necessary percentage to complete them during the period. The beginning inventory costs, which were before or included in weighted average, we're going to, in FIFO, we're going to take those and fully send it immediately to our finished goods inventory. So this is just kind of an overview, is that when you look at over here and going back to what we were doing previously is to kind of compare the charts. So over here, we would include beginning direct materials added. We would then use the equivalent units to send this over here and here. The difference between when we're doing this with FIFO, big difference right over here, is that we're taking this beginning direct materials amount and immediately sending it to finished goods. Similarly, over here, we're taking those beginning conversion costs and sending it immediately to finished goods inventory. Then what we're going to do is we're going to look at the cost during the period, the conversion added and the direct materials added. We're going to look at our equivalent units, and then that's what we're going to go through and then send out over here. And then we're going to end up with our ending direct materials WIP, ending conversion WIP. At the end of the day, when we're using weighted average or if we're using FIFO, the total amount of these three will be the same. However, they're going to be different depending upon the method we use. So FIFO is going to be different than weighted average. So with FIFO process costing, here are the steps that we're going to do to complete the question. The first thing we're going to do is we're going to draw 3 T accounts. We're going to do one for direct materials, one for work in process conversion, and then one for finished goods inventory. That is the same as what we were doing for weighted average. We're also going to put in the amounts for basically the beginning inventory amounts, as well as the costs incurred during the month. However, the difference is what we're going to immediately do is we're going to transfer the beginning balances to finished goods inventory and do that immediately, so that the ending balance in the work in process accounts should be those costs during the month. The second step we're going to do is we're going to determine the amount of equivalent units for direct materials and conversion. Now, the started and completed and the ending inventory units will be the exact same that we did as weighted average. The only difference here is that because we're transferring out those beginning inventory costs, we're now going to look at the numbers and say, okay, what did I need to do to those beginning inventory units to make them 100% complete? So when we are doing the equivalent unit calculation, that's what we're going to be going through and doing. So I'll go through an example. We're going to use the same one that we did for weighted average. Then when it comes to determining the cost per equivalent unit, this is the other difference. I'm taking only my cost during the month. Remember, I already sent out those beginning inventory costs, so now I'm just doing the cost during the month. And I'm dividing this by my total equivalent units under FIFO. Then over here, basically for step 4, I've got 2 options. And again, this is kind of the same as under weighted average. I can compute the value of the ending inventory and then say, okay, that difference between the cost during the month and the ending inventory is what I sent to finished goods. Or I can start with what did I send for equivalent units for beginning and then started and completed. What did I go through and then send? The last thing I want to do is in step 5 is I want to go through and check my work. I'm going to add up the ending inventory work in process from direct materials and the conversion accounts with the finished goods, and this needs to be equal to the amounts incurred for direct materials and conversion. So that's what I'm going to be doing here for my FIFO process costing. So I want to thank you for watching. If you have any comments, please send them to 1812cpa@gmail.com. I'm going to go through in the 4th video, I'm going to go over the same example, but using FIFO that we did previously for weighted average. Have a great one, and I look forward to seeing you on the next video.